You will be a millionaire by the time you retire if you prioritize investing in index funds when you're under 30. It's so easy, but sometimes it's the simplest tasks that are the most challenging. So make sure to watch the entire video because we will discuss how to set up a Vanguard account, fund it, and find index funds to invest in. This video will be a beginner's guide to investing with Vanguard. Now, index funds, mutual funds, and ETFs can all be used interchangeably to some extent. An index fund is a type of fund that tracks the performance of a market index. This could be similar to the S&P 500. When you invest in index funds, you essentially invest in all of these businesses that are represented in the specific index that the fund is tracking. It is the responsibility of the fund manager to ensure that the performance of the fund matches that of the actual index. So, for instance, if the S&P 500 has increased 10% over the year, the index fund or mutual fund that tracks the S&P 500 must also have increased 10%. In this video, we'll concentrate on ETFs because in my opinion, they have a lower minimum investment requirement and are much simpler to buy and sell. When you invest in mutual funds, you contribute X dollars, and the fund then invests that money on your behalf using an ETF. There are some similarities between the businesses you invest in, but their trading practices differ greatly. ETFs are similar to shares you can purchase. Similar to purchasing shares of Apple or Tesla, you can buy or sell ETF shares whenever the market is open. Let's discuss how to set up your Vanguard account now. This brokerage has commission-free trades, high-quality funds with low expense ratios, and excellent customer service, so I highly recommend it for both beginners and seasoned traders. Most of you, 95% of you, will be eligible for a Roth IRA account. And if your annual income is less than $139,000, I strongly advise you to start making contributions to this retirement account. Now, open a traditional IRA if your income is higher. I'll now walk you through the process of creating your own Vanguard account. Go to the Vanguard homepage at vanguard.com. Click on Personal Investors, and then scroll down the bottom of the page. You can either open a brand new account or transfer an existing account or assets into Vanguard by clicking Open an Account after deciding what you want to do. If you haven't already created a Roth IRA, you'll likely just select Open a New Account. You will now be questioned about how you will fund this new account. In essence, this question is asking you where you plan to get the cash to make the initial deposit into your account. An electronic bank transfer, transfer from another Vanguard account, rolling over from an employer's plan, and transferring investments from another financial institution are the options. After making your selection, click Continue. If you have never used Vanguard before, you will complete an online application. You'll also require your account number, the routing number, and the name and address of your current employer. Your account type will be the first thing the online application will ask you to select. You can choose between an IRA, a general savings account, an education account, a 401k, or any combination of those. You have to make less than $139,000 per year to qualify for the Roth IRA. But if you do make more than that, then you can choose the traditional IRA. If you don't have any retirement accounts yet, I advise going with the Roth IRA. The actual completion of the online application is the second step, and this will take between 5 and 10 minutes. You will receive a confirmation that your account has been funded and is ready for access within 1 or 2 days. So select Continue, and from this point on, we'll select Retirement. Our choice will be a Roth IRA. Then, when asked, what's your goal for this money? You can select Growth, for example. Right, what you enter doesn't matter. The source of funding, select Income. And the type is, let's just say, General Savings. You must now gather the details about your employment status and affiliation before you can open a brokerage account. After that, it will prompt you to enter the name of your employer and ask you a few additional questions about it. Your bank information and other personal information will also be requested. You have an account once the required information has been entered. It's fairly easy. It's very simple to understand. Simply follow the instructions and you should be good to go. Everything is looking good now that the account is set up and the initial funds have been transferred in. Except for the realization that just because money is in your account doesn't mean it's invested. Many people commit this grave error, believing that the funds in the account have been invested. No, it's just idle in your money market or settlement account. To deal with that, you must withdraw that sum of money from your account and invest it. There are three things you can do when you go to buy and sell. You can use this to transfer funds to and from your Vanguard settlement account. Invest in Vanguard mutual funds, trade ETFs, or buy or sell stocks. We'll choose trade ETFs or stocks because this video is about Vanguard and buying a Vanguard index fund. After that, you can choose between buy and sell under transaction type. The process comes to an end when you completed the transaction, whether it's buying or selling ETFs. Now, let's discuss the benefits of ETFs while referencing Vanguard's ETF page. They are essentially saying that investing in ETFs combines the diversification of mutual funds with less expensive minimum investments and real-time pricing. Simply put, it means that whenever the market is open, you can buy and sell ETFs whenever you want. Compared to mutual funds, it is more adaptable. But why might investing in ETFs be preferable to buying individual stocks? Well, the first benefit is unquestionable because investing in an ETF carries less risk. Because it is such a diversified investment, it is significantly less risky. You could lose all of your money if one company has a really good year or a really bad year. However, there is a good chance that your investment in the market as a whole will perform well over the long term. The fact that it requires much less work to simply purchase ETFs is another fantastic benefit. You don't need to conduct any research because the actual stock selection will be handled by a fund manager. Let's now examine every ETF that Vanguard has to offer. On their website, 75 ETFs fall under various categories. They have US bond ETFs and US stock ETFs, large, mid, and small cap ETFs. They also have international stock, international band ETFs, and sector and specialty ETFs. You can find an ETF that correlates with any sector or industry you want to invest in. Many really good ones from Vanguard perform incredibly well and have very low expense ratios. We can start by discussing the Vanguard S&P 500 ETF. We can see from the summary that this one invests in S&P 500 index stocks, which are 500 of the biggest US companies, intending to track this index return. The S&P 500 index funds have a lot of potential for high growth, which is one fantastic feature. These 500 businesses are among the best performing ones in the US. Therefore, your ETF will perform well if the US economy is strong. The ticker symbol is VOO.IV and the expense ratio is 0.03%, which I believe is one of the most important factors to consider. That's incredibly low, at least in comparison to many other ETFs with similar expense ratios, and over time, you'll save a ton of cash and fees because of that. This one scores a 4 out of 5 on the risk/reward scale. Additionally, you can look at the portfolio composition right here if you'd like. It had 505 stocks as of October 24, 2022, and the fund's total net assets were $686.2 billion. Apple, Microsoft, Amazon, and Alphabet are some of the biggest holdings. That is awesome. Okay, before we talk about another Vanguard ETF, please give a thumbs up if you are enjoying this video so far. And also, watch until the end to know the ETFs which more diversified and safer than VOO. Now, let's get back to the topic, this time with the Vanguard S&P 500 Growth ETF. This and VOO are very similar, but this one is slightly more geared toward growth. It falls under the large growth category, according to Vanguard, and has the ticker VOOG.IV. Now, with a 0.10% expense ratio, this one is more expensive. That surpasses VOO by more than 3 times, but this is still very low when compared to other ETFs that follow the same index. Vanguard assigns this a 4 out of 5 ratings. Even so, I believe that this is riskier than VOO because far fewer companies are participating. Additionally, this ETF contains 242 different stocks according to Vanguard. The majority of the companies in this ETF will be the same as the top ones in VOO. Amazon, Microsoft, and Apple are all available. The Vanguard Total Stock Market ETF is another that I suggest new investors check out. This one has more stocks than VOO or VOOG combined. As a result, it is more diverse and, in my opinion, a little bit safer. This one monitors the CRSP US Total Market Index performance. It includes businesses with large, medium, and small cap sizes. This one has also risen by about 19.9% over the past year. With 4,066 different stocks, VTI has $1.1 trillion in total net assets. Apple, Microsoft, Amazon, Alphabet, and many more are present. However, this one will contain numerous tiny holdings and portions of a huge variety of other businesses. And that's the beginner's guide to opening a Vanguard account, adding money to it and some ETFs to purchase. You can purchase anything you want once the money is in your actual account. Both individual stocks and bonds are available for purchase. ETFs can be bought. You have the choice. Because of the extremely low expense ratios and the fact that it is a diversified investment, which is quite safe, I strongly advise purchasing these ETFs. These index funds have helped so many people become millionaires, and you can certainly duplicate their success over the next 20, 30, or 40 years. If you haven't opened a Roth IRA yet, you should think about doing so, especially if you have some money to invest and want to retire with a guaranteed $1 million. The greatest benefit of Roth IRAs is the ability to withdraw funds tax-free after retirement. And believe me when I say that will save you a ton of money. Everyone uses Vanguard when it comes to investing. It's one of the most dependable platforms for investments available. It's also among the simplest accounts to open. Well, that's it for today. Thanks for watching until this very end. I'm Fred, and if you're serious about investing in ETFs, and want to find out the only ETFs to make you a millionaire, then be sure to click and watch the next video here.